please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC-TV18. I'm Ekta Batra. With me is Prashant Nair, and it's turning out to be a day where we are taking a breather after the strong run that we've seen for the market. So the Nifty is just about flat, or rather higher by around 17 odd points, and we have the Sensex, which is up by around 67 odd points. For the mid-cap index and the Bank Nifty, if you compare it to what's happening with the frontline indices, then yes, it's a tad bit of an underperformance, but right now nothing to really complain about. If you're talking about specific stocks, that seems to be where the action is. So for example, we have stocks such as Bharti Airtel, which is seeing that amount of pressure on your screen, down around 4 odd percent, United Spirits, which is down over 5 odd percent, and the likes of Syngene as well as Biocon. In fact, talking about Syngene, that is the management, and we'll cut across in just a second. Hi, Prashant.
Ekta, hi, and I think the press conference beginning, and we, by the way, get to chat with the management one-on-one in just a bit. And maybe we should just dip in for like a 30-second window and then come back. Listen.
Crore rupees, while on a year-to-year basis, our 9-month revenue was up 11% to 1,059 crore rupees. That's the third consecutive quarter of increasing growth, and I really think it reflects strong fundamentals and a robust business model within the company. EBITDA for the quarter was up 8%. It was to 138 crore.
All right, that's essentially the management of Syngene, who we are getting to speak to in a one-on-one fashion in just a bit from now. Just outlining the numbers that have come out. I just want to highlight, and Ekta pointed out, the fact that the momentum has been so strong for the last couple of days. So today is maybe a pause kind of a day. So I mean, just putting that into numbers. That's it. Look at how the momentum has accelerated, and these are 5-day gains, essentially weekly gains. And look at what has happened. First week, the Nifty did 50 points. Next week, 122. The week after, that's the last week, we did 214 points. And this week, as of yesterday, the Nifty was already up 188 odd points or so. I mean, it's a 4-day weekend, 1-day holiday. A simple point is, it's not just the aggregate amount of gains that indices put on, it is also how fast it is happening, and it has been actually getting faster and faster. So maybe a bit of a pause is not exactly a bad idea at all, even though you might call this a pause. There is enough happening across the board which warrants our attention. So just wanted to make that point. I mean, you could look at this in a weekly fashion. You could look at it for every 1,000 points that the market has put on. I think from 35 to 36,000, the Sensex did it in about 6 or 7 trading sessions. Or you can look at it in any time frame. The simple fact is that gains have been coming in at a faster and faster pace. So with that short comment, let me quickly get some strategies, as we always do, right on the top of the show. We have Yogesh Mehta of Motilal Oswal, who's now joining in. Yogesh, good morning. Good to have you here. Your quick thoughts on what we're seeing on the screen and your ideas.
Yeah, sure, Prashant. Good morning. Overall, market seems to be, one or the other sector is taking the lead for having a relentless rally, continuation, gravity-defying rally for Nifty. And now we have seen almost 11,200. Now it seems that 11,100 should act as a support because we have expiry date tomorrow. And many open interest position is there in the writing of 11,000 call option and the call options. And now we see that further IT rally is still continuing, and today it is up by 4.5% each and every IT stocks. And defensive one, pharma is also now starting a rally. What we believe is that Nifty can continue upward momentum between 11,100 to 11,250 for next 2 days. And the recommendations which we are recommending is Bharat Forge in auto segment and auto and defense segment. 748 is the rate in future segment. We are looking at 780 as a price target, keeping a stop loss of 730 in future segment February. Other one is Vedanta consolidating between 347 to 330 level. Yesterday it has broke out of the range and today corrected, and again 347 is quoting it right now. Keeping a stop loss of 339.5 in future segment February future segment. One can look at target of 365. And the third one is Hexaware in IT pack, where all the IT stocks are moving. So can we consider to buy from here at 382 rupees in February segment, keeping a small stop loss of 377, and target could be in the range of 393 to 395 levels.
Okay, all right, Yogesh, we're going to leave it on that note. Thanks very much for joining in and taking us through those strategies. We have Sudarshan back with us this morning. Well, Sudarshan, over to you then. What are you recommending in a consolidation kind of trend today?
Good morning again. See, this market is so easy to trade. There is only one recommendation: go and buy the Nifty bank. Till the market doesn't give us a message, we want to stay long. In the morning I said, buy these instruments at the open. And of course, you should be carrying positions and continue to carry these positions. Your stops are 11,025 in the Nifty and 27,200 in the Nifty bank. With these stops, be on the long side of the market. And tomorrow is FNO expiry. I mean, it could be very interesting. Who will get the upper hand? Will the bulls get the upper hand? That would be interesting to find out. So be on the long side and we'll find that out.
So Darshan, where are the bears to get the upper hand?
I'm sure they're hiding, and there'll be a day when they come out, but not soon.
Your trade, Sudarshan?
Well, KPIT is a buying opportunity. It has been for some time. Actually, all IT is running away. Mid-cap IT, large-cap IT. So you could literally close your eyes and buy one of them. The KPIT is the choice for the day. Siemens is a buy. This is a much better chart. That it's part of the larger infrastructure group, if we define it that way. And there is an investment buying opportunity in Siemens, apart from the day trade that we are discussing here. And finally, Sun Pharma, which is now in an uptrend. The bear market is behind it. A consolidation and a base building is over. Sun Pharma is a buy on every opportunity, every dip.
Okay, all right. In fact, we have a couple of Twitter queries, and the first one is on Sun Pharmaceuticals. Apurva has 100 shares of Sun Pharma at 509. Wants to know the way forward, Sudarshan.
Well, the way forward is you hold on to it. See, this is an investor's market. There is no sense in trading in and out and then taking small profits or panicking or anything. This is a good quality stock. It's now started on an uptrend. Stay for years.
Okay, we have Dinesh who's written in. He's got 2,375 shares of Vakranji. He's paid 433 rupees for them each. He wants to know the long-term view on Vakranji. Sudarshan.
The long-term view is upbeat and bullish. See, Vakranji has had a very spectacular run, including today. So at some point, the stock prices will close. And the investor must understand that every day we will not see rallies and uptrends and big moves like we are seeing now. But that doesn't change the structure, that doesn't change the view. The view is that higher levels are coming. Just expect consolidations in between. Be on the long, hold this stock, and you'll see you'll get good rewards.
Well, we have with us Jonathan Hunt, the CEO of Syngene International, joining in to discuss the company's Q3 numbers now. Mr. Hunt, hi, thank you very much for joining in. I wanted to start with your margin performance. Though your revenue has grown around 15 to 16% year on year, there seems to be some disappointment on the street with regards to your margins actually declining on a year-on-year basis. Can you tell us if there was any sort of increase in costs and what your operating efficiency would possibly be for the rest of the fiscal?
Yeah, but we're very happy actually with the overall revenue performance. We've seen good acceleration. If you recall back at the beginning of the year, we were growing about 6%. Last quarter, we were up to 10%. This year, this quarter, 15%. So good acceleration. But I think we flagged, quite well to the investor community the amount of investment and building that we're putting around new infrastructure, new capabilities. We saw a number of those come on stream during the quarter, so that they're now ready to support future business growth. I can highlight one or two of them. If you think around the investments we've made in biologics, state-of-the-art biologics manufacturing, that now is up and operational this quarter, so should start to contribute to future revenue growth from next quarter. That's 3 state-of-the-art 2,000-litre bioreactors, and it's exciting to have that. So we're in an investment phase. We laid that out quite clearly. Actually, from an internal point of view at least, the operating margins and performance are absolutely where I expected them to be. In fact, maybe a little bit ahead given the size of investment we're making. But particularly pleasing is to see that reacceleration of the top line. So pretty good quarter from my point of view.
Okay. If you had to provide us with some sort of picture or guidance in terms of the margins, because you've sustained over 30% for multiple quarters now, will it average above 30%? Do you think that there's a possibility because of the kind of investments that you've made that it could even slip below 30%?
No, I mean the EBITDA margin for the quarter was 34%. When we've talked about this in a long-term sort of strategic planning perspective with investors, we've been quite clear. Anything in the low 30s, so 31, 32, 33, is pretty good performance, and it looks very good compared to our global peers. Anything above that, you know, if you're at the top end of that range, as we have been over recent years, is very, very good margin performance, particularly while we're simultaneously going for a lot of expansion and investment. So I'm pretty pleased with it. Certainly where we are today at 34% or so EBITDA margins feels about right as we're balancing both growth but also investment in the business.
Jonathan, hi. Good morning. Could you talk a little bit around what you think would be near-term demand drivers for your business across verticals?
Yeah, and you can almost see what I think will be the future drivers in what's happened in this quarter. So very, very happy with the expansion and extension of the strategic partnership we've got with BMS. That's a long-term relationship, and it just keeps getting better. So we've expanded the scope of the services a little bit more in terms of breadth, in terms of the science that we're covering with them, but we've also expanded it. So that now will move up to around about 500 or so scientists working on a global basis with the BMS scientific teams around the world, and also they're bringing on a new lab space as well. So we're bringing in a bigger capacity there, and we've extended that relationship out to 2026. So that's a good example of us high-end, sophisticated, complex partnering and really making a difference, or a really meaningful contribution to our partners' R&D initiatives. I think the other elements, and I flagged up that new capacity that's come online now in biologics, that's a real growth area. I mean, it's a growth area for the whole industry. You can see that in just about any market around the world. Pharmaceutical and biotechnology companies are really investing in those sort of technologies. So having new capacity, I think you'll see over the next few quarters, but certainly over the next few years, that becoming quite a meaningful driver for us. And then within the discovery services sector, strong performance overall in discovery services, but the biology team, and that's really the discovery engine that supports the biologics, had a very good quarter, and I expect to see that continue.
Okay. Jonathan, just leave us with what happened in terms of, you know, maybe the regulatory aspect of the business. I know last quarter you had seen multi-inspections. You had a European inspection as well as a Brazilian one. And all of them, I think, passed off successfully without much observations or any observations for that matter. How is this quarter? Any news you can share with us on the same?
More of the same. I think actually you've captured most of the, or if not all of the recent events. Very pleased with the performance there. It's not, that said, being pleased is, it always worries me. You've got to be ever vigilant and make sure that you're on the top of your game every single day when it comes to compliance and quality systems. It's an area we take seriously, we invest in. We're always looking for new ways of bringing in new technology, whether it's lab notebook systems or electronic data capture, just to make sure that we're really doing that in the right way. So pleased that we went through all of those inspections, got a clean bill of health, and of course you learn something every time, and we're always looking to push that a little bit further, because there's only one standard that we intend to operate at when it comes to quality, and that has to be world class.
All right, Jonathan, thanks very much for that. Good conversation. Good luck, and we hope to speak with you soon again. Thanks indeed. A very quick break. Up next, we discuss, as always, what's happening in the commodities space. Manisha is going to be here, and she'll be joined by Aurobindo Prasad Kyan of Kotak Commodities. He'll put out some trades in that segment of the market as well. For now, I mean, we're leaving with the market, the Nifty, which is absolutely flat. 1.5 odd point change. See you on the other side. So 3.5 odd point change on the Nifty as things stand. There isn't very much going on, at least on the index level. Monday, Tuesday, the Nifty accumulated about 190 odd points. So just taking it a bit easy after the big run we've seen, not just this week, but the last week, the week before that, and the week before that. So it's been quite a run, 2018 so far. I just wanted to very quickly take a look at three stocks, basically. One is United Spirits. It's had a tremendous move, big move, and numbers came in yesterday. Numbers disappointed. Stock is actually correcting meaningfully now. I mean, I think it's down almost about 7% or so. 7.25 nearly. 34.80 is where United Spirits is trading at this point. I think that pretty much is the low point of the day. And then you look at the telcos. I mean, essentially Bharti and Idea, where Bharti at one point, not very far back, as we were starting the year, Bharti especially was looking like it would take out its previous 2007-8 kind of all-time high levels, but it's now way off. I mean, I think it's a full 100-120 rupees off the all-time high level. So 470 on Bharti, and Idea is back under 100 rupees now. So let's see the interesting to see the trajectory of those two names after the move that Jio made once again on prices. We'll come back to more stocks. There's more action, but let's also touch base very briefly on what's happening in the commodities space. Aurobindo Prasad Gyan will be with us in just a bit. And I think one common theme across commodities has to be what's been happening with the US dollar. The dollar has continued to sink, and that, of course, has a big impact on everything, all commodities, pretty much all commodities which are dollar denominated. So I'm being told that Aurobindo should be with us in just a bit, but we don't have him yet. Ashwini Gujral is with us now, and let's swing back to equities. Ashwini, good morning. Good to have you here as always. Your reading of the market first before we get into anything specific.
Market is okay, and I think told you yesterday that what was happening was unsustainable, and that's why a cool off is needed. But there is action, which means that there's clear movement of money into tech stocks. Since morning they have cooled off a bit, so I would think this sort of a decline from the highs should be used to get long on tech stocks. I think they've started a very long bull market. So maybe banks are kind of ceding some leadership to techs, but the way they are moving, large stocks are moving 4 to 5%. That just shows, what kind of money is getting reallocated. So the idea should be to get long on tech and stay long. I don't think the rest of the market will really collapse or anything. You'll basically have techs going in one direction and local economy stocks going in the other direction. As far as individual stocks are concerned, I think even now you can get into a Tata Elxsi with a stop around 1100, look for targets of 1165. TCS is a buy with a stop of 3200, target of 3320. And Mindtree is a buy with a stop of 775, target of 800.
Okay, well, Ashwini, I'm going to request you to hold on because we need to take a quick mandatory break, but we're going to solve this Twitter queries for you once we're back, and we're going to get to chatting with some companies on their numbers as well.